Welcome to our special tech-focused IRD Invest event this morning. My name is Jane Lowe. I'm the Managing Director of IR Department, and it's a pleasure to be hosting Chris Hart, who's the CEO, founder and Managing Director of Oventus, here with me this morning. Thanks for coming, Chris.
Thanks for having me, Jane. Always a pleasure.
It's also a pleasure on our behalf to support you on investor relations. So just by way of intro to Oventus, we probably all know somebody who snores, but often snoring is a signal of a bigger problem, and in this case, obstructive sleep apnea, or OSA. With OSA, people stop breathing during their sleep. It's a big problem, and it can lead to other major comorbidities like heart disease and stroke. Oventus believes it has a fairly major role to play in the treatment of OSA through its therapeutic, which is called the O2 vent, and a bigger sleep treatment platform that sits behind that. The company's starting to gain traction selling the device in the US and Canada, and Chris will talk us through the highlights of that in a moment. So the format for today is Chris will speak for about 15 minutes, then there will be about 10 minutes for Q&A. If you'd like to ask a question, please do so via the Q&A function at the bottom of your screen. We'll get through as many questions as we can in the time that we have. With that, Chris, I'd like to hand over to you. Thank you.
Great. Thanks, Jane. Once again, thanks everyone for dialing in. Under the current conditions, it's great to be able to share, our story in the update. It looks like most people in the room are already either in the stock or I've spoken to before, but it's good to see some new faces or names anyway as well. So as Jane said, we're a sleep apnea device company based in Brisbane. We have a proprietary platform technology, which is our integrated airway into an oral appliance, and we have add-on devices and accessories that can function with that, and it's increasing the reach and efficacy of a mouth guard to treat sleep apnea from 50-60% success rates to over 80% based on our random crossover trials and the salvage trials. The market in the US obviously very large, $2.5 billion. If we look at just selling our device to the patients that have been diagnosed that are currently not using CPAP, so there's 30 million sleep apneics in the US, 6 million have been diagnosed, and 3 million are outside of care. Average revenue per unit for us is about 800 Australian dollars. We have developed a lab-in-lab program, and I'll get into that more in a minute. But basically, it enables patients to be treated in a collaborative care model with sleep physicians and nurses working together, sharing patient care and also revenue and profitability. And that's actually very challenging, particularly in North America, where there are multiple sets of regulations that would normally prohibit that. So I guess my background in corporate dentistry and in sleep apnea allowed us to navigate through those different regulations and set up a mini clinic within sleep facilities. We launched the concept of that last year in June, July, prior to FDA clearance of the Optima. And so we had contracted sites signed before we had FDA clearance. We've now got 57 contracted sites. We've launched 27. I think we've launched a few more since we did the writing of this. We have minimum quotas in these contracts from a regulatory point of view. And if they reach their minimum quotas, which pre-COVID was taking sort of 4 to 6 months, it's a little bit choppier. We've got some sites going faster at the moment and some being interrupted again, but at minimum quotas of 20 devices per site per month, those launch sites would generate 6.2 million in annualized revenue, and the contracted sites over $13 million. When COVID hit, we introduced telehealth very quickly. So when sheltering at home was in place, and it still is in place in different parts of the country, sleep labs are reporting across North America a 50% reduction in patient flow, and a lot of the patient interaction is now done online. And in fact, in our business, half of our patient interactions are done via telehealth. And so that's increased efficiency, reduced the lead time to treatment and revenue, and increased conversion rates. So I guess that's one of the positives that's come from COVID. Sleep apnea, I'm sure most people are aware, you stop breathing multiple times when you're asleep. It has severe comorbidities, socio-health, economic costs, and long-term health problems as well. So I won't click down on that too much. The standard of care is a CPAP with a mask and a pressure pump to pump air into the airway to splint it open. We know that it's very effective, but around about half of patients who try CPAP will abandon therapy within 12 months. And even out of 100 patients diagnosed with sleep apnea, only about 65 will try CPAP, 35 say, not for me. 15 of those on average wouldn't make it through a CPAP trial. Out of the 50 that are left, half of them would abandon therapy at the end of the first year. That's why we have these 3 million patients that are diagnosed and outside of care. Diagnostic rates are increasing. Our technology, there are mouth guards that work to bring the tongue forward, to stop the tongue flopping back. The tongue's only responsible for the airway closing off in about 40% of cases. So for that reason, advancement devices, have about a 50 to 55% success rate in treating the problem. By incorporating the airway into the appliance, we're also now bypassing obstructions, resistance and collapse in the nose and in the soft palate, which is the punching bag at the back of your throat, and the sidewalls as well. So this is the only device that can deal with all levels of obstruction. CPAP can splint all levels of obstruction, but it tends to cause nasal obstruction, which is the main reason for non-response to CPAP therapy and for oral appliance therapy. So putting a second nose in the device overcomes a lot of the shortcomings of existing technologies. As I said, there are, sorry, light just went off in my phone booth here. 3 million patients outside of care at the moment. It's a $2.4 billion market. The sleep apnea therapeutic market was growing double digits for many years. That's falling back to high single digits, but within that, the oral appliance segment, which currently is only 10% of therapeutics, is forecast to grow about 25% between now and 2025. There's the technology again, that integrated airway is increasing efficacy in oral appliance therapy for patients that normally wouldn't respond by 20% by bypassing multiple levels of obstruction and at the same time stabilizing the tongue base. So we're dealing with the nose, the soft palate, the side walls of the throat and the tongue base. So instead of someone soft palate collapsing and switching to a mouth breathing situation where everything fails, we can breathe through that channel as an auxiliary airway. We also have a positive end expiratory pressure valve, which on the right-hand side there is a one-way flapper valve. It acts as a ratchet pump, which as you breathe through the night, it inflates the airway via your own breathing. So that valve there and the airway combine, rearrange upper airway physiology to take the problem with therapy, which was nasal obstruction and mouth breathing, and it actually turns the patient's own breathing into the CPAP. So it's very effective, increasing success rates to over 80% for mouth guards, a significant and quite dramatic improvement over existing mouth guards. And in fact, when we show the technology to sleep docs, the first thing they say is, great, where can we get it? So one of the reasons we looked at the market and we did try selling to dentists and through dental distributors, unfortunately the physiology involved is reasonably sophisticated, and sleep physicians understand it immediately and can see what we're doing. We're delivering PEEP, which is exactly what a CPAP is designed to do. We're bypassing upper levels of instruction with early treatment with obstructive sleep apnea is actually a tracheotomy. So this is like a mini CPAP combined with the Clayton's tracheotomy, all in a mouth guard. So they go, great, where can we get it? So we've dealt with the first objection to mouth guards in that we've increased the efficacy to CPAP-like levels for the majority of patients. The issue then was the complex patient journey. You say to the sleep doctor, why don't you refer out to the dentist? And they say, well, look, I'll never see the patient again. They'll be lost to follow-up and they're going to charge them a lot of money. Then if you say to a dentist, why don't you do more oral appliances? They say, well, every time I refer to a sleep doc, I never see the patient again, and they end up on CPAP. So the Lab in Lab program, we knew we didn't need a full dental clinic or a digital workflow company, so we placed these wand scanners, which you can see in the middle photo there, within the sleep facility, and we use them to take records inside the patient's mouth in the sleep facility. The device is shipped to the patient at home or to the sleep facility and fitted by a dentist either directly or remotely. We can claim it under existing codes with Medicare, as well as in commercial payers in North America. So we've now shortened the patient journey. We've brought the patient into care at the point of diagnosis, and in doing so, we're now sharing patient care and revenue between all the stakeholders in the patient journey. Financial year highlights, as I said, we got to 57 sites contracted in a year from launching the program, and 27 sites launched now. We introduced telehealth, which has increased conversion rates and shortened time to revenue. We've got our FDA, we've got our Oventus Optima FDA clear. We've introduced XVent globally outside of the US. We're preparing for a 510K application in the US. We increased revenue a little bit. We were on a good revenue build until COVID hit and we got truncated, but we're certainly fighting back hard now and growing revenue. We're back on track really where we'd hoped to be had COVID not occurred, and through COVID, and thank you to our investor support, we did strengthen the balance sheet to ensure that we had adequate runway to get to profitability. You can see here we've been signing and launching sites even through COVID. We did it virtually. We couldn't physically scan patients, but as we introduced telehealth, we were able to engage with them online, verify their insurance and schedule them for therapy once the sites became open to patient flow again. We also contracted further sites and we launched virtually, which means we trained the sites to identify patients and schedule for telehealth ahead of active patient treatment. So we managed to maintain our relationships with patients and potential customers and customers through COVID. As you can see here, we launched the outreach for the Sleep Lab in Lab program in June, July last year. We gained FDA clearance for Optima in September. We were growing revenue through December, September and December quarters. March quarter, we were truncated, in March quarter's June quarter, we were truncated by COVID. The device sales there, you can see are through to the end of August. We've obviously grown significantly since then. We have some really solid uplift in the September quarter, and we're hopeful that that will continue on an ongoing basis based on what we're seeing in terms of the funnel of sites being launched and relaunched, the telehealth consults booking in, and the conversion rates that have increased from 50% up to around 80% since we introduced telehealth. I think that's exemplified by this graph here where, we continue to engage through COVID. We actually treated some first responders on the front lines because CPAP for them was not an option due to potential aerosol risk. And then at the introduction of telehealth, we increased the conversion rate. So trading out of COVID, we increased sales per site pretty significantly. We got about, I think we had 15 sites back online at the end of September. We have a few more coming online this month as well, aiming to launch or relaunch 3 to 4 sites a month. We expect patient flow to remain subdued through the end of this year, but in response to that, we'll continue to launch sites so that as patient flow returns, we're hopeful that we'll see even more significant revenue growth in 2021. We also developed a home care extension of Lab in Lab, so in areas where patients aren't able to access the clinic, so we're able to provide therapy in their home as well. So it's almost an Uber sleep scenario for us now. We piloted that, it was successful. We're getting ready to scale that up. We're launching that on a larger scale this quarter. These are our sites. We had 27 launched. We had 12 scanning when at writing, and increased at the rate of about 3 a month. Patient flow is increasing. Most of the sites are averaging between 5 or 10 at the moment, so we're probably at just under half quotas on average. It is growing, and we're hopeful to get them back online over the coming months. Telehealth, as I said, has been a big benefit, and as we launch more sites and patient flow increases with those conversion rates and the more efficient systems, we're looking forward to some really solid revenue growth through the remainder of this year and into 2021. So we're relaunching and launching additional Lab in Lab sites. We're expanding the telehealth and home care. Half of our interactions are via telehealth now. Every patient goes through telehealth at intake, and the conversion rates have increased up to 80%. We're looking to maximise device sales and reduce lead times to revenue by rejigging our training and launch programs, and again, telehealth bringing patient treatment forward faster. We're continuing to negotiate contracts. However, really for us, our sole focus at the moment is bringing sites back online and getting to minimum quotas, controlling costs as we do that, and then reducing COGS. We have 2 projects that over the next 2 quarters should reduce our COGS from 40% down to 20%, generating 80% GP margin on our device sale revenue. Looking to lodge a 510 FDA approval for XVent soon, and hopefully in market next year. And the Lab in Lab program, we have started managing sites in other jurisdictions in Australia, and with Air Liquide here in Australia, and also looking at other partnerships that may take us into Asia and Europe at the moment. Our board, I'm sure most of you know Mel and Sue, we've got a very strong board, an extension of the executive team, and Sherrard, Jake and Paul, very experienced US NEDs as well, really have helped us navigate the US market, and starting to engage US investors also. I'll throw that open to questions now. I don't think much has changed since this slide was written.
Okay, excellent. Thanks, Chris. We do have quite a few questions that are starting to come through. So we might just start with one around the US and where the interest is coming from. So question is, what's the split between people taking devices using private insurance and Medicare? Are many people paying out of pocket?
Sure. So in the US market, around about 20% of patients are covered by Medicare, Medicaid. Depending on what region you're in, you may see a higher or lower percentage of Medicare patients. So in the southeast, you'll probably see more Medicare and Blues. In the northern parts of the country, less. Reimbursement's generally higher in the northeast and northwest with commercials. And in the south, it's generally lower. Out-of-pocket expenses will depend on whether the dentist or the sleep physician is in-network or out-of-network. So in-network, the copay is probably about 20%. With Medicare, I think it's $80. Out-of-network, the copay could be anything. And so I'd say around about Probably 50% of sites are out of network at the moment, but we have been working on bringing them all in network to reduce the out-of-pocket for the patient.
Excellent, thank you. Maybe just give a bit more colour around what's going on in Canada as well. It sounds like you're starting to really get a bit of traction there. So how's that all?
Yeah, we've got about a 6-month head start in Canada. We had Optima there in February last year, and you know, we sort of started doing lab in lab there sooner. It's starting to snowball up there. We're launching, you know, a number of sites. We have a national on board up there, Kerrika Health. You know, we're expanding with them quite rapidly. There's another large national that has it's an umbrella business with 2 or 3 regions under their umbrella, and they've come on board. So it is starting to snowball in Canada. Ontario, Alberta growing very quickly. To get into BC now as well, and into Manitoba. There looks like there could be a little bit of a comeback of COVID in Ontario, so we're watching that closely. Having said that, you know, we traded through in Ontario reasonably well, and now with our home care model and our relationships with first responders up there, we're comfortable that we can trade through that if it does there is a resurgence. But yeah, it's really getting its straps up in Canada at the moment. Sorry, the other thing in Canada is there were changes in Ontario to CPAP reimbursement that it was reduced by, you know, their margins were almost taken away completely. There was a 40 to 50% reduction in reimbursement for CPAP. So those vendors are looking for additional revenue to replace that, as well as, of course, the reduction in revenue due to reduced patient flow.
Thank you. I might just get you to stop your screen share so people can see you in a slightly larger format. The other question on the kind of geographic split is there much of a difference in the way that you're tracking to minimum orders in the sites in US versus Canada?
No, the sites that get the minimum orders more quickly are generally sleep physician owned or contracted, as opposed to DME. So the difference we see is that DME arrangements tend to take longer to get to revenue because they've got to do a 90-day CPAP trial before they offer oral appliance. And that's our sort of second pass market. Our first pass market is in the sleep physician setting or the sleep lab, where they've been diagnosed and they're being managed, and they could be a candidate straight up, or they have a direct relationship with the sleep physician. So we see faster revenue builds in those situations that are doing DME, more so than whether it's Canada or the US. Having said that, we have a lot more sites in Canada because we've got a 6-month head start there. Patient flow is increasing across both markets. It is starting to come back. I wouldn't say it's blistering pace, but it is building back to pre-COVID levels.
Okay, excellent. We've got a question here about informatics. So CPAP players have the informatics and data coming from the machines, which they use to prove compliance to the insurers. This is the key to getting reimbursement funding and market penetration. How does the mandibular device overcome this issue?
So there are compliance chips that can be put into oral appliances as well. There's 2, Theramon and DentiTrack. You know, they work, they're in market, they do add some cost to the manufacturing side. They're not a requirement at this point. It may become a requirement, in which point you can start to incorporate. We certainly have the ability to put compliance chips in the devices if it's required. It's just not a requirement at this point in time. Additionally, I think in the long run, I do feel that an app-based solution will be where that lands. So you could track efficacy, or you can at the moment track efficacy and compliance using an app. You just got to ensure that that device is in the patient's mouth you think you're following. So there's a little bit of a loop that needs to be closed there, but I think that area will evolve very quickly.
Okay, excellent. I've got a question here about kind of annualized revenue. So each site operating at minimum 20 units per month generates approximately $250,000 USD per annum in revenue to Oventus. Is that correct?
So, and I'm not that good at maths in my head, when we ran the numbers, and there's 2 sets of revenue, obviously. In the lab and lab, there's over-the-counter revenue, or underlying sales, which is, you know, $2,000 to $2,500 a unit, which is much greater than what we've quoted in this slide deck. Our take at about $800 a unit across 57 sites comes to just over $13 million annualized. And of that, around about $600 is device sale and $200 in service support fees.
Thank you. Question here about how to get access to devices in Australia. So can I buy a device in Australia? If so, what's the process here to get one?
Sure. Sorry, Jan, we'll backtrack to that last question. On those numbers, just doing the numbers in my head, it'd be about 210,000 annualised. Yeah. In the US, that'd be USD. So if someone wants a device in Australia, we can go to the website and so we can point the patient in the right direction. And in some places, we already have the mobile home care service, or you can be scanned in your home or in your business. So certainly the pathway in Australia, while we don't have a fully fledged lab-in-lab ecosystem there, we do have a dental network and sleep physicians supporting us in Australia. But just go on the website, send an email, pick up the phone, and we can point you in the right direction.
So o2vent.com is the address for that?
That's helpful, yeah, o2vent.com.
Yeah. Okay, we were talking about costs earlier. So what do you expect your cost profile to look like over the next 12 months?
So at the moment, we've got cash reserves through the end of next calendar year without sales. We're managing that cost base down. We're between 1.5 and 2 million a quarter at the moment as we build revenue, and revenue is building significantly and reasonably quickly. There is a lag on receipts to book revenue, but we've still got significant revenue on both build on both book revenue and receipts. We would expect that as we build revenue, we're going to add in some further investment into people, and that's more, I guess, a layer of management whereby we set these sites up, and what we need to add in once we're operational now in certain regions is a layer of management to optimise. And so we're focusing in that Ontario area at the moment and Alberta, so we'll add in a resource there on the ground. I think we have I can't remember exactly how many sites, but it's quite a few in that area, and so we'll have a dedicated resource on the ground up there optimising. And then also in the southeast, we have a number of sites launching in the southeast, and similarly we'll add in a layer of middle management there, and then centrally, a regional remote manager as well. So there's probably 2 or 3 people that we'd add in a quarter over the next 2 or 3 quarters to continue to build revenue and optimise the sites. But our cost base should remain largely the same as what it is now.
Okay, excellent. Quick question here about the relationship between sort of getting dentists and sleep docs to work together. How are you finding that conversation's progressing?
For us, it's very easy because we are, the patients are patients of the sleep facility, and the dentists are in effect required to deliver the device. So by putting in place our lab-in-lab program, we have a legal structure for them to collaborate and share in patient care and revenue. So, if I'm a dentist running my dental clinic trying to do sleep, it's going to cost me about $500 to $600 to attract a patient that completes therapy. And that's from my own experience running clinics for 20 years across Australia and now running clinics in the US as well. So if I say to a dentist, why don't you come over here, do a day a week, we'll give you 5 patients a day and you're going to make $5,000 a day doing that, it's a very easy conversation to have. And if we have the same conversation with the sleep facility and say, why don't you keep those patients in your care and we can utilise some excess capacity and we can share with you the patient care under your own systems, and you can monitor them and you can generate revenue as well. It's very, we don't have any problem at all. We've got massive demand for the lab-in-lab program, and dentists really do enjoy working in the sleep facility with sleep physicians. That is the desire of most dentists in this field once they know it's available. Unfortunately, historically, and even now, there's significant siloing without this arrangement in place. So, there are scenarios where they can do home sleep testing and this sort of thing, but both parties tend to, they officially separated a couple of years ago, and we're, I guess, finding a way for them to collaborate again.
Excellent. Okay, well, I think we've covered a lot of ground. Obviously, the numbers that we talked to today were sort of full year numbers. So just a reminder that Oventus's 4C report is due out by the end of October. So look forward to obviously getting through the reporting period there and communicating that to investors. Thank you, Chris, for making time.
My pleasure. Thanks, Joan, and thanks everyone for listening.